Imagine you started treating your trading like an actual business. In this video, I'll show you exactly how to approach the market like a true professional. So if you're ready to stop playing around and finally take your trading serious, well then let's dive right in. So the first thing that I want to talk about is a pre-market planner. I see way too many beginners simply wake up, slide their laptop across their lap, and then start trading. That is a horrible approach to the market, and that is one way to ensure that you will remain unprofitable. If there's one thing I've learned throughout my years of trading, it is that I'm competing against people who take this craft very serious. So if I don't take it as, if not more serious, well, then I simply can't expect to beat the market. In other words, you have to treat it like a business and not a hobby, because if you treat it like a hobby, well, then you're going to get hobby results. On the flip side, if you treat it like a business, well, then you would get business results. So many people are approaching the market every single day without any idea of where they want the market to go. However, if you, before the market opens, analyze the market and figure out exactly where you want to see the market headed today, look at the news calendar, figure out what news are coming out today, what is the theme of market, well then all of a sudden you will have way more confidence in executing your trade. So right here we are looking at my pre-market game planner. This is what I write every single day before I come into the market. Oftentimes I will make my students do this pre-market game plan because it needs to become a habit. So the first thing I look at is the theme of market. Now, when I say theme of market, I mean things like the economic calendar. How are we looking in terms of news? What did the overnight session do? And what do I expect from the overnight session? For example, if the overnight session trended downwards, well, then there's a good chance that the New York AM session will have an expansion move higher. So again, we want to write down the trend, the overnight session. Did we gap up? Did we gap down? What is the economic calendar looking like? All of these different things we are going to put under the theme of market. Now, the next one is a pre-market screenshot. The reason why you're going to put a pre-market screenshot is because it is a great tool to have once the day is over. So you might have certain thoughts about market conditions before the market actually opens, but sometimes you'll be wrong. And that's why it's nice to have a pre-market screenshot so that you can go back and see if you missed anything. The next thing I write down is my key levels for the day. That could be fair value gaps, order blocks, basically any level where I expect a reaction from. It could also be liquidity or imbalances. Where do I want to trade away from and what do I want to trade towards? All of these things I'm writing down because if price then ends up coming to those key levels, well then I have way more confidence in executing that trade. Now, this might sound like rubbish, but I guarantee you by simply writing it down, you will have way more confidence in those key levels. The reason for that is because you know you spent time actually studying those key levels, and if you thought that those key levels were a good idea pre-market, that means that it was rational thinking. Traders will often think very irrationally when they are about to enter a trade or already inside of a trade, which is why it's super important to write down pre-market because you are completely unbiased. You're not in a trade and you're not about to enter a trade. Now, scenarios is also something I like to write down. What are the different scenarios that I expect from today's market? This is a really good exercise and I highly recommend that you guys do it. Let's say that you write down a scenario and that scenario happens to play out. I guarantee you your confidence level will be so much higher. Conclusion is basically summing everything up, writing down what is my drawn liquidity, where do I expect the market to go, what is the current trend of the market. All of these things we're going to write down in conclusion. The end of day check-in is obviously the check-in at the end of the day where you write down exactly what happened, were you right, were you wrong, what can you do better next time. I highly recommend that you record a video of yourself explaining and going over the market for that given day. Now, yes, this does require time, but again, this will not take you more than 15 minutes, so it's really just a matter of consistency and discipline. When you take a look at hedge funds or really just any money management firm, what they care about is data collection and data reviewing. They understand that us as traders have so little control over the market. We don't control whether we're going to win or lose the next trade. We don't control whether the market is going up or down. But what we do control is whether we are going to learn from our past mistakes and the risk that we put on. And all these different things is what we can actually control, so we better double down on it. When you talk about any other regular business, it is essential to have data. You want to know your profit and sales. You want to know your profit margins. You want to know your expenses and all these different things you have to pay attention to if you want to grow a regular business. Now, trading is no different. You want to treat it like a business, so collect all the data that you have. The only way that we can truly learn from our past mistakes is through our data. So let's use today's market on the NASDAQ as our example. The first thing I always make sure to look at is the economic calendar. It's very important for me to look at the economic calendar because that can give me an idea of the volatility for that given day. For example, on a day like today, we have no red folder news, which means that this is likely going to be a less volatile day. So that is exactly what I'm going to write down in the theme of market. I am going to write, we have no red news folders today, which probably means that we will have a less volatile day. Now, me personally, as a trader, I enjoy trading volatility. So on a day like today where we have no red news folders, I am expecting low volatility, which means I might approach the market differently in terms of risk. I will consider approaching the market with less risk as there is not a lot of volatility. So that is the first part of the theme of market. Now let's move on to the next one, which can be things like the drawn liquidity, the overnight session, and the overall trend. So here on the NASDAQ, we have a weekly imbalance up here, which is unmitigated, meaning we haven't hit it yet. And that has been my drawn liquidity for a little bit. And as you can see, we are very, very close to that weekly imbalance. Now, zooming in here, you can see that the overnight session actually trended downwards, which can be a strong sign that the AM session will have an expansion move higher. This will likely also mean that we will gap down today, which means that we will have a regular trading hour gap or an inefficiency higher. This is yet another confluence for the market to shoot up higher to fill in that regular trading hour gap and then go for that weekly imbalance, which is my overall drawn liquidity. So again, that is exactly what I'm going to be writing. We are extremely close to my longer term target of the unmitigated weekly imbalance. The overnight session trended to the downside, which means I am expecting an expansion move higher in New York AM. Now, another thing that we want to pay attention to when we talk about theme of market is the overall order flow of the market or the trend. And as you guys can see, we have been bullish for quite a while, which is only going to add on to my conviction in terms of hitting that weekly imbalance. The overall trend in the market also seems to be bullish, which again adds on to my conviction in terms of hitting that weekly imbalance. So this right here is essentially what I would write when it comes to my pre-market game plan. You basically just want to go over the trend of the market, your drawn liquidity, the overnight session, and the economic calendar. This will give you a great idea of what to look for when the market actually does open, and I guarantee you, you will have so much more confidence. Now, the next thing here is a pre-market screenshot. I really like taking my pre-market screenshots at a 15-minute time frame. So that is exactly what I'm going to do. And I can actually see another setup playing out right here. So something else that I could add is it looks like a power of 3. Now, if you're confused as to what a power of 3 is, it is essentially accumulation, manipulation, and then distribution. So it is a 3-phase concept. And the first one is called accumulation, which is just another word for a consolidation. And you can see that right here. The whole purpose of this is to generate buy-side liquidity and sell-side liquidity, which you can see that we have done. Now, when the market then decides to run the lows, this is what we call the manipulation phase. And this is essentially to trick all the traders who are shorting this market because of this rectangle breakout. Now, the final stage of a power of 3 is called distribution, and that is exactly what we're going to be trading. So because I zoomed into a 15-minute time frame, I noticed this power of 3, which again just gives me more confidence in higher prices. So I'm going to write distribution and then a question mark because we don't know whether it will be a distribution or not. Then I am going to take a screenshot. I'm going to come up here and I'm going to click copy image. I'm going to come back into my pre-market game plan and paste that image. Now, this is super important because this is my thoughts pre-market, and having a screenshot of it will allow me to see on any given day whether I was right or not on this day. And so the next time a market comes around that looks like this, let's say I was wrong, well, then I can use this information to get a better idea. Vice versa. If I'm right, I can also use that information. So it's just a really great idea. Now, the next one is key levels. So me personally, I like marking out liquidity, and as you can see right here, we have equal highs. And in case you're confused, equal highs is a very significant pool of liquidity. Again, because we have stop losses at this high and we also have stop losses at this high. So again, we just have a lot of liquidity at these highs. So right now, everything is pointing towards higher prices. Now, what I'm going to do is write down the price target of these equal highs, which is 23.75. So I'm going to come back into my pre-market game plan and I'm going to write 23.75. Then I'm going to write equals equal highs slash short-term DOL. So that right there is a key level. Now let's have a look and see if we have any more key levels that we want to point out. So zooming out here to a 12-hour time frame, we do actually have one more key level that I want to pay attention to, and that is this 12-hour imbalance. Now again, we have large inefficiencies right here. As you can see, we have a 12-hour imbalance here with a volume imbalance, another one here. And this essentially is a magnet for price. There's a very high chance that price wants to fill in some of this inefficiency, especially because we have not hit that imbalance yet. So I'm going to write down this 12-hour imbalance as a key level as well. That's 22.92. So that's 22.92. And I'm going to write 12-hour unmitigated imbalance. So right now I have two key levels, and that is enough for me. I currently don't see any more key levels in the market that I want to pay attention to. Again, we do have that weekly imbalance up here, but I already mentioned that in the theme of market. So let's talk about the scenarios that I see playing out for today, because I do see a few. So one of the scenarios that I could see playing out today is we move down lower again and get another sweep of the lows to again fill in some of the inefficiency of that 12-hour unmitigated imbalance, and then start a market maker buy model towards that weekly imbalance that we have up here. So this right here is going to be scenario #1. So back inside of the pre-market game planner, I'm going to do scenario #1 equals another sweep of the lows to fill in that 12-hour unmitigated imbalance, followed by a market maker buy model towards that weekly imbalance. So that right there is one of the scenarios that I see playing out. You could also just take a screenshot and paste it under the scenarios, although me, myself, I like writing it out. Now, the next scenario that we could see happen is that we simply leave that 12-hour imbalance alone, because again, if we go on the 12-hour time frame, we have been moving with a lot of displacement, and these gaps here could just be breakaway gaps. So scenario number 2 is that we completely ignore the 12-hour imbalance and we just finish the distribution side of the power of 3 and rally straight into that weekly imbalance. So again, scenario #2 equals we ignore the 12-hour imbalance, finish the AMD/power of 3 and rally straight into the weekly imbalance. Now, the reason why I want to write this down is because notice how I have a scenario that could be bearish, but then bullish, and then my second scenario is just completely bullish. So regardless of what happens, I'm expecting higher prices at some point today, which then tells me that, okay, no matter how I look at the market, at the end of the day, I'm expecting higher prices, and that now gives me my drawn liquidity. So regardless of scenario #1 starting off bearish, it ends bullish. And again, that just gives me so much confidence in me trading towards that weekly imbalance. So now the only thing left for us to do is write out our conclusion. So I am going to write, expecting a less volatile day, I am overall bullish towards the weekly unmitigated imbalance. Ideally, I get a trade within the distribution side of the AMD/power of 3 towards the weekly imbalance. Of course, I am going to wait for one of my systems to present themselves before I trade anything. So because I wrote down everything that I'm expecting from today's market, I now have a very good idea of what I want to see when the market opens. If the market then confirms my bias and starts moving higher, I will have so much more confidence in taking a trade towards that weekly imbalance. So a lot of people will think that a pre-market game plan is useless and a waste of time, but I guarantee you it is so worth it. The last thing I want to take you through is how I personally journal my trades. So we're going to take this Euro USD swing trade as our example for today's journal, because I guarantee you that journaling is what separates professional traders from beginner traders. A lot of people do not have the discipline or the consistency to be able to journal, but I guarantee you this is what will make you profitable, because this is what allows you to learn from your mistakes. So this was a trade that I took on Euro USD, and it took a few weeks to play out. Again, this was a swing trade, and as you can see, we have a power of 3, which again, phase 1 is the consolidation or the accumulation, phase 2 the manipulation, and phase 3 the distribution. So exactly like the power of 3 that I just showed you on the Nasdaq, it happened on the weekly chart on Euro USD. Now this was combined with my reversal model, which is essentially a low being printed within an imbalance that did not fill the entire imbalance, and that right there was the bullish catalyst for me to figure out exactly when the manipulation move would end, and that is when I took the trade. So this right here is exactly what the trade journal looked like. I am writing down the instrument, the position size, the day, the time. Now, all of these things may not seem like it's worth it or it matters, but I guarantee you it does. Because if you write down the day and the time, which a lot of people think is useless, you can figure out what time of the day you're the most profitable. You can figure out what time of the week you're the most profitable, and then only trade within that time period. Now, because this was a swing trade, I include fundamentals as well as seasonality. This is not something I would do if it was a day trade, as it does not really matter. But when we're talking about a trade that took 8 weeks to play out, fundamentals and seasonality play a huge role. I'm then writing down the technical analysis, reversal model, and the power of three, as well as a discount, the take profit price, stop loss price, and entry price, the time it took for that trade to play out, the break even. Now, in this case, I didn't go break even, so I wrote no answer. Partials at internal range liquidity, emotions, emotionless trade, plan was followed, everything was in alignment. Chart image. Now for chart images, you want to come onto trading view. You want to go up here where it says publish, and then you want to click publish idea. We're going to give it a Euro USD long. It doesn't really matter. Blah, blah, blah. Continue. And we're going to do long. We're just going to choose a random one here and then publish private idea. This is going to give you a link that you then copy, go into your journal, and then you paste it into here. So if I now click this link, well, then it will bring up the trade and it's right there. And this is just a really easy and organized way to keep your chart images. Now, the next thing that I write is the P&L, the money that I made or lost on this position. And this down here is probably the most important part of this entire journal. But the last one is arguably the most important one of this entire journal. In this example, I wrote this trade should be used as an example for my future positions. Everything was in alignment and the plan was followed and executed exactly how I'm supposed to. The only thing that I should have done was leave runners. So the post-trade thoughts is essentially where I come clean and say exactly what I should have done better, if there was anything that I could have done better, did I follow my plan, and all these different things. Now, the reason why runners should have been left in this example is because I was trading based off of a power of 3, and if I was correct and this was indeed a power of 3, well then the distribution would at least go to the high, so it would have been nice to have runners. Not the biggest mistake in the world, but something to note for the next trade. So thank you a lot for watching this video. I really hope you understand the importance of treating trading like a business and not a hobby. This right here is my way of treating it like a business, making sure that I'm collecting the data and putting in the hard work. So again, thank you a lot for watching. If I did help you out, make sure to hit the like button and subscribe to my channel. And without further ado, I'll see you in my next video.